TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and the Friday edition, Friday, June the 1st. Unbelievable. Half the year just about is gone. I mean, it was just the other day that I said we're about to start the new year. Well, this is a very interesting day. One of my worst fears is unfolding. I hope that by the end of the day it doesn't come to pass, and I'll explain what I'm looking at. I do not want to see the Dow close from this level, minus 227 at 12,165. Remember when I did Tom's show yesterday? I was the guest host. I said, Dow under 12,300, watch out. Dow is quite a bit under 12,300. I want to just take 1 second here to set this up. I'm just looking at, I want to get on my cell phone, on my Verizon Droid, I want to get this show so that I'm absolutely sure that you're looking at the charts the way I want you to see them. A week from today, at this particular point, we will have been over 2 hours into my upcoming webinar. That webinar, and I know many of you are starting to sign up, I believe that the special should be going on. They haven't changed it. They haven't changed the time, which should have been the end of last night for the special. Now that special is going to be when you actually add it up, you're really only paying a few $100s for an entire day. Think of a plumber. Plumber comes in. What's the fee? Well, I have a webinar coming up, a live webinar coming up. And that webinar is going to be so comprehensive. I'm not going to try to overwhelm you. I'm going to go step by step by step, live as well as fixed. I'll have charts that I'm preparing. I'm going to send out charts prior to our meeting Friday a week, 9 o'clock until 5 o'clock that evening. And then I'm on vacation after that. But I'll still be doing my daily report. So this is going to be something that I've spent a lot of time trying to, in this particular market environment, and I'm going to show you and explain to you why it is so important at this particular point for the Dow not to close at the lows of the day, because Monday could actually be a really, really sharp down move. I was prepared to take our long-term positions to raise the stop so that we were taken out of one of our positions, Toll Brothers, we had from $18.79 back in November. We got taken out today for a 42% gain. It was 52% just four days ago. I wanted to actually add to the position, but the more work I've done on this, the greater I see the chances are of even the home builders coming down very sharply. And Toll right now is actually at 25.29. It was at 28.20s. Just that's 3 points higher just 4 days ago. I am very cautious. We added to our short position. We've got another position short that I think is going to be like a core position, like we've held our two core positions on the long side. We still, at this particular moment, still have GE as a long position from the 16, right down 16.27 back in December. I'm prepared to give it up. I know that we can always get back in if something happens. I do not want to give up gains that I see are potentially hazardous to our wealth. I'd rather pocket that money and try to enter again at some point. Let me explain why. I'm going to do two things at once. The webinar, and we're going to be covering the chart patterns. I do at every master trader. It's called the master trader series. It's really not a master trader. It's a master. When Steve taught it was a master teaching. And what he did is he tried to encompass all his thoughts and to be as succinct as possible to give you as much information. That's what I'm going to do. I'm going to show you the chart patterns that I think are going to be pertinent to this incredibly, as I told subscribers, we are looking at an incredibly whippy summer. And that whippiness, up and down, probably making lower highs and lower lows, is going to be really important. That's the reason why I want to look at charts coming up right now. And I'm going to take calls at 877-927-6648. Let me just quickly tell you, if you do it by tonight, I'm sure that TFNN is so busy that they will not get a chance to change the date, which was last night at midnight, May the 31st. But you can save $200 off the registration price. Instead of $795, it's $595, number one. You will get access to my Moving Averages webinar. I love that. I think that webinar is just incredibly helpful. I get emails all the time from people saying, thank you, thank you, thank you. It's going to tell you about moving averages and to give you information about the MACD, the stochastic, but also which moving averages, how you can use them. It's a $99 value thrown in. I want you to use it before the webinar, and you can go to it as many times as you want for a month. Here's another thing. You get 1 month free of my newsletter, the opening call. It's a $128 value. And believe me, that is really worth $128. Plus, I will follow up on all your questions for 1 month after the class. You just email me and say, I think, is this a peak A or is this a trough O? I will email you because the ChapmanWave is the waveform that never sleeps, just like its owner. I don't need all that much sleep. So, look, think of what you're doing. It's $795. But you're not going to pay $795. You're going to pay $595. You're not going to pay $595 because you're getting $99 free. A discount of just a gift of the webinar, and $128. So that's another over $200. So it's like $395. Find me a plumber that's going to come and do 9 o'clock till 12 is 3. 8 hours. 8 hours of work for $300 and something bucks. Find me anyone that'll do that. I think this is value. And value it is, and I'll explain what I'm looking at. These are the charts that you will see. You'll see the easy techniques. Look at this. I'm showing right here at on Tiger TV the cues. Now let me just run the numbers quickly because we've got someone online I want to get to. We've got Kevin. I'm sorry, Kevin. Kevin wanted to talk about gold. He's from Grass Valley, California. Kevin, I'll tell you what. Call me back. I'll give a few minutes for you to call me back. If you don't, I will still do gold because it's really important right now. So call me back. I want to do it. I'd like to do it with you because I'd like to ask you questions about it. Meantime, I'm going to quickly run the numbers. The Dow is down 231 at 12,161. There should be a bounce somewhere to get to like a 197, minus 197, maybe even 185. Then if we don't go to minus 165 by mid-session, be careful, because if we come back and we retest the minus 228, this 12,165 level on the Dow, and then by 3 o'clock we start to close towards the low of the day, I am concerned about Monday. I don't care if we have a fantastic rally to the upside today, and I still have a long position left. I don't care about that. I've added to the shorts. And if the shorts get taken out, I'm fine. I want to be at a higher cash level than we've been in a very long time. That's what I'm looking at now. Why? Because some of those great stocks that have been and have been clobbered in the last 3 to 6 weeks, at some point they will be great buys for a strong counter trend rally. So this is what I'm looking at. The Dow is down 26 at 1284. The comp index is down 341 at 269. So the Qs are at 60.85, down 121. You've got the New York Stock Exchange. We'll look at these charts in a moment. It's down 149 at 7,315. Ugly looking chart, making lower lows. The dollar is at 83.05. Crude oil is down. Remember, I spoke about crude oil. I said it looks terrible. It's at 83.24. High-grade copper is at $3.31, down 0.04. Not as bad as you would think, but it's not good. Bonds are up 2.5 points at 152 and 3/30 seconds. I'm going to cover all that in a moment. I'm going to go to our first caller. We've got Mike in New York. Hi, Mike. How are you?
Good, Basil. Good morning. My question is, I'm contemplating shorting either Baidu or Las Vegas Sands. If you compare the two, what do you think is a better short? Or
Las Vegas
they're
Sands.
not good shorts at all, and you know.
Okay, Las Vegas Sands on a monthly basis is starting to fail, and it went to a right shoulder. You know this pattern. It's called a right arm extension. It was a cup that broke out that should have gone higher, and it failed at the right side price time match. So it went to 62.09 in April of 2000 this year, and then it pulled back, and it went under the 9-period exponential moving average. This stock looks like this is the cup formation that if you break more than 50%, says that there's a really good chance that you can go down to the previous low, which would be around about the 48s. It's at 40. Wait a minute. Whoa, that was a mistake. 36s, sorry. It's at 43.73. That's the monthly chart. The weekly chart is about to test the 42.23 200-period exponential moving average. I've got a. Well, let me just do this. Take 1 second here. I always go to a specific candle first. Here we go. I've got a left side, right side price time match. And that says that by, that's a long time. By July, the 13th, week of the 13th, it should get to 42.74. I'm actually going to change that. That's going to be there to there. Okay, there to there. That's the candle. Yeah, I don't have any choice. That's the way it is. So it says by or before July the 17th, if 42 is taken out, there's a real good chance you're going to test 40.03, the low of the week of the 16th of December. So I'm just doing the quick study of the charts, and then I'm going to tell you which one I think at this particular point bodes better for you. Now it's broken down, so the risk reward in the daily is kind of tough because it's at a point where it could bounce. So I'm going to tell you what I would do. If we close at the low of the day, I would just nibble on LVS as a short for Monday if the market is going to tank on Monday, because overseas markets really tumble on Sunday night. But let me just finish this. So we've got the LVS is at Las Vegas Sands at 43.82, down 236 right now. And what we're looking at, the dreaded H has failed decisively so far today. Looks like it's going to close below the 45.66. If it does that, then it says it could bounce, and the best it could do is bounce to the 48s. So here's my thinking. LVS is definitely a short based on the monthly chart, based on the weekly chart. The risk reward, now let's go to the Baidu. And the targets I've given you, the targets are down to 40 and then 36. Now Baidu. Same kind of chart pattern, you're right. Baidu is only really starting its monthly dreaded H, that H pattern. These are the patterns, folks, I will be teaching in this webinar this coming Friday. You recognize these numbers and these patterns, and you will know exactly where you can put stops and buy stops. So this is what I'm looking at. So we've got a break coming up. Let me do the work during the break, and then I'll give you my answer. 1 or 2 minutes is not going to make much difference at this particular point because you're not in these particular trades. So hold on, Mike. We'll be right back with Mike and Mike, 2 mics, straight after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. So we're on with Mike, and we've got Kevin waiting to talk about gold. So this is what I want you to do. Mike, your question was, is Baidu a better short than we were looking at LVS, Las Vegas Sands, or is Las Vegas Sands bad? They both have very similar chart patterns in the weekly chart. One of the things I'm looking at is that they both have made this arch pattern which says that if the Dow was to close at the S&P and all the markets, the index is close towards the lows of the day today, there's a really good chance that we could open Monday really ugly. Even if there's an intraday reversal Monday, we could open very poorly. Now, one of the things that I wanted to also mention was that regardless of any rally, I see Baidu coming down at some point to test its low of 100.95, and it's at 114.55. I see Las Vegas coming down to test those lows as well at some point. So my suggestion is that you could do one of two things. You could either start a small position shorting Baidu and shorting LVS, because one is going to have a slightly steeper decline based on the chart formation, even though in the end they'll come to the same thing. So that's one way to do it. But the other is to put in on either one. It really doesn't matter. On Baidu, you could start a position right now. Even if there was a bounce, it doesn't matter because it would be a very small position. But I would add to it at over 118.60. I would add to it with a stop on that position, a stop of 120, 116 something, and a stop would be at 120.40. A 4-point stop I don't think is a big deal. Why? Because this rally, because it's gone underneath the left side low, should fail below the left side high of 122.85. So to give it some room, I'm saying you can short above 118.60. And you could just have a 4-point stop because I don't think it's going to make it unless there's a big market turnaround sometime next week. And we're going to get to that as I do the show today. Number one. Number two is Las Vegas Sands. Las Vegas Sands, I would do the same thing. You could, even though it's at the low right now, this market is very ugly. And I would say that it's going to go quickly to the 42.23 area. It's at 43.67. So this one, I would only have one position, and that would be a very small short right now. And that short, I'd actually have a very tight stop on it because I'd have a tight stop by putting a stop maybe 3 cents above today's high. And the reason being is that it's so close to some pretty good support at 42.23. If there's a horrible market on Monday, this thing's going right through it. So I'd rather be in the position, even though it's a small position. You know what I'm saying? And take a chance of a bounce. By the end of the day, going into Monday, there could be a bounce. I don't think so, and I'll explain why in a moment. But in the meantime, that's what I'm looking. Now, what's the target? I told you, if the 40 level breaks on Las Vegas Sands, then you can be looking at 36 sometime in late June or maybe even early June. So that's the way it's looking.
On Las Vegas Sands, that's an F in the monthly, right? There's no C.
It's an F/C, but now it's definitely an F. There's no chance of it being a C at this particular point.
Yeah.
Okay, I hope that helps you.
Yes, very much.
Thank you very much. But now let's go. Oh, we lost Kevin again. I'm sorry, Kevin. Kevin, I know you're listening. You probably just can't actually hold on to the phone. He wanted to look at gold. I'm going to look at the GCN, which I think is July. Yes, GCN. But I first wanted to do gold itself, the GLD, which trades at 1/10 the price of gold. If you look now, I had mentioned on the show when I was doing Tom's show, I believe it was yesterday, that there's a chance that gold might become a currency of fear. If it becomes a currency of fear, then it has legs of emotion. Because on a technical basis, what it's done is, if you're looking at these weekly charts, folks, I'm going to be teaching. Look at the way it makes a left side, right side price time match when it went from 185. Well, let me talk about two things. It's been in a very long-term up channel for 2 years, 2.5 years. It broke out of the GLD, broke out of this is the Spider Gold Trust. It's trading at 156.25, up 463. It broke out of that, went to a peak D. These peak Ds are so important. It comes down and makes the pattern that I call the dreaded H. I'm going to teach you about that. I'm going to mention, but not spend much time on the falling axe, inverted falling axe pattern, because the dreaded H and the falling axe potentially are the two bearish patterns, and the up channel support, which it broke, which is the same line as that rising wedge, that's what was taken out. Now gold has spiked up because it held the 148.60 level in the left side, right side price time match from 148.27 low of December. I'll go on with the GLD. Why? Because it's moving up right now. It's very important. We need to know where it can go to. I'll be right back. Basil Chapman, and I'm going to show you some charts that are going to knock your socks off when we get back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. I had two questions during the break. One question is, yes, it's going to be my webinar. The whole beauty of the webinar is that it's going to be archived. So I know that some of you have mentioned that you just cannot attend that particular day, but you don't have to. Even though it's live, you'll be able to listen to the whole thing over as many times as you want for a month. And believe me, the pertinence of the techniques that I'm going to show you are going to be relevant to this particular market even more than ever. So I'm an advocate for teaching the ChapmanWave. As you know, it's the waveform that never sleeps. Every single peak and trough gets counted. Every single bar gets counted. I'm going to show just dozens of different things that are going to be specific. I want you to have a point that you know exactly when that happens, I can do such and such and such and such. That's very important. It was number one. Number two is I've been looking at the gold the gold contract, but I'm looking at the IAU. That's the iShares that's the Gold Trust iShares. It only trades at 1568. It's not up in the GLD price range, and it does exactly the same. So my preference is for the IAU. I'm going to make a suggestion here. Start a little position. So this is for Kevin, who was on, and then he got bumped off. So Kevin, if you're listening, the IAU is trading at $15.68. Don't get carried away. I think I have to still treat it because of the gold chart monthly peak F. I have to still treat it very gingerly on the upside. But I'm going to suggest that you start a position in the IAU. at 1568. You can have a stop on this because if it comes down, it's going to fill the gap at some point. But if it fills the gap and touches the high bar of 1532 of yesterday, I would say, you know what? It's going to be pretty much done. If this is going to be a move for gold, it's going to move right away, and it's going to go straight to 1597, the 200-period exponential moving average, relating that to the GLD. That would take the GLD to 159.23. It's at 156.42. Same thing. I'm just saying my preference is to go for the lower price. It trades at a tenth the price. Why not? It does exactly the same thing. Volume isn't quite the same, but it does the same thing. Now the technicals are saying yes, it's improved in the 120 in the daily chart in the GLD, but we're in leg C, an overlapping leg C, which usually in the 120-minute chart usually should take you to a D. It stopped where? Right on the 200 moving average. Now this is really important. This is how important these moving averages are. And that's what I'm going to be teaching. Look out, it was a repellent for the GLD back in April, late April. You couldn't break above it. It went to a peak D. How many times have you seen peak D, huh? So I'm suggesting, yes, take a small position, and a small position because you got to give yourself at least so 156 on the GLD, and I say 152, the bar right there, 152.71. If it touches that, I'd say, okay, maybe that's pretty much the move. This should continue into next week if this is truly a fear trade. Okay, now we're going to do the other things. I'm going to quickly show you. So I hope that helps you, and I hope that answers the question. As far as the longer term is concerned for gold, I still see gold coming down, lower highs and lower lows, but it might be rotating through a kind of a sideways action if it's the fear trade. Now, folks, every day my opening call, my subscribers see this. I give a very just a ton of work. If they have time to read it, great. If they don't, I do a synopsis right there on my Trader's Corner. I showed the arch formation in the 120-minute chart of the Dow. I said if it breaks below 12,300, be careful. So it's done that. I showed the VIX index. I said this is G/C with a cup formation. If you want to see it break under 2320s, because if it goes above in the 25s, that's bad. Well, it hit 2602 this morning, and it's in leg. So far I have to call this peaks, a potential peak C, with a possible leg D to go up with a 120-minute chart. And look at this. This is the arms, the Richard Arms Trin index, which I use. I have my own Trin gauge, ChapmanWave Trin gauge. It's at $1.21. It's showing nothing. It's not showing any fear. I hate that. It means that even if there is a rally today, that fear indicator I want to see on a day like this, it should be up at 284 was the high 3 days ago. This should be up at 320, a new low. So, okay. Now, I'm going to do something, and here's the Dow, which is broken to a lower low with the arch formation, and the S&P, which is broken to a lower low. So that takes me to our next caller. We've got Mike in Ormond Beach. Hi, Mike. How are you?
Great, Basil. Last week about this time, I was listening to you talk about the VIX, and you were looking for a move, leg D, which
right.
I believe we are in now, correct?
That's exactly right.
On the daily. And I know you thought that we would get up around, the 28 to possibly the 30 area. And, I'm looking for where you think we might get some kind of a tradable bounce.
Okay, so there's a couple of great points. Now, if you recall, what I had said is my impression was that there was a chance that we might have a bit of a rally, a counter-trend rally, before we can get to the 26s or 28s, but my target, longer term, was up there in the 30s. That's what I was saying. So we had a couple of intraday bounces. I hate those intraday bounces when they come from nothing and they come from rumor. Why? Because they usurp strength. They take away confidence, so that every time it goes up like that and then fails, the worst part about it is that it turns out that you start to lose confidence, and the rallies can't hold. At some point it will hold. Now, when I had said that all my little ducks were in line for a potential bounce. What I was talking about were my three bears. That's VIXY, Bondi, and Dolly. That's the dollar, the volatility index, and bonds. I'm going to go through all those charts right now. What we're looking at is that the volatility index actually went to leg D today. It went above the 25-14 area of the 18th of May. Now it's actually at the low. It's at 24. The high today was 26.02. Already that should have produced a rally to minus 175 to minus 168 in the Dow. It's not doing that. I'm worried. I don't like that. Now, I have in my volatility index on the weekly chart, I have a price time match. Now, these price time matches very often work out. Sometimes they don't, but most of the time when they work out, you know they're working out because they're moving down or up towards my targets. Now, this is what I'm going to be teaching a week from today. Look at the way the volatility index made a beautiful left side, right side price time match in the weekly chart from April of last year at 14.30 to peak D November of 2011 at 48, retested at 46.88, couldn't break the 48 round number high, and it came down where to within 1 week it broke below that 14.27 to 1366 on the 16th of March. That's 1 week earlier than I had drawn in my chart with the inside wedge, which I'll be teaching as well in this particular course. So this is a fantastic indicator. And what's happened is I said that if it starts to walk the 9-period moving average, that means this white line here, which is at 2106, the VIX is at 2559 right now. So if that continues to rally, the next resistance will be at 29, somewhere around 29 to 30. Next week. But okay, I have a price time match which says if we continue lower, in other words, if the Dow takes out 11,000, say 800 over the next week and a half, I don't know if it can, it might rally, but we'll see. Then what we're looking at is I've got a price time match which takes us to about the week of the end of July, maybe the beginning of August as a high. Now, I don't know if that's going to work out, but all I know is that the 200-period moving average is at 2360, and today, Friday, if it closes decisively above 2360, so let's say 2420 or higher, that kind of close says that the MACD and stochastic are pointing upward, and that to me, it's not the dollar, it's not the euro, it is the selling pressure based on the volatility index. Richard Arms did a fantastic amount, just a great job, even though I read it very differently to the way he reads it. He did a fantastic job by building this indicator because it shows selling or buying pressure. And to me, that is very important. And what's even more important is that the monthly chart is showing, as I discussed here for so long, that blue zone, if you're looking at Tiger TV, this is a monthly chart. Also, even there, you went to peak Ds at 89.53 in the crisis of October of 2008. What I'm looking at here is that last month we closed above the 9 EMA. Whenever it does that, you've got to be careful because follow through the following month with a very strong candle. That's really what I'm concerned about here. So, to answer your question, the volatility index in the mid-25s is showing selling pressure until it goes under 22, then 21, and then into the 19s. That just continues to be selling pressure. Rallies are probably going to be for shorting. So the answer now, that's the answer to the volatility index. The SPY itself, the weekly chart, today's Friday, and it's decisively closing under the 9-period moving average in the weekly chart. I discussed this technique, another technique I'm going to teach a week from Friday. And remember, folks, you've got until tonight to get this fantastic discount. That's C1, C2, which says that the C2 is slightly lower than C1, but everything about it says the characteristic looks like a double top failure pattern, because the MACD and stochastic were failing, and you've got a volume climax that has not worked in the weekly chart that should have taken you to at least a peak D in the daily. All of this really adds up to my saying all the evidence is that the tide is really rushing downward. It's going to low tide it's not coming up to uptide. The wave, you might surf a wave inland, but you've got to be careful because that tide is taking you out. So I hope that answers some of your questions.
Yeah.
Okay. Now the SPY itself is off. Oh, that's interesting. The SPY itself is under the 131.60. No, 129.55 was the low of the 18th. So today, 121. Today we've gone to 128.74, and we are touching the 200 period simple moving average, which is what many technicians look at. So we'll see. Can there be a late day bounce? I just don't know if it's going to happen. I don't like the fact that the trend is just ignoring this as if nothing happened. So those are the answers to the question, I hope.
Thank you, Basil.
Thank you. Now, I also have, in the S&P, this is what another thing that you might just want to know just before you sign off. I've got a left side, right side price time match, which says that 1202 in the S&P, it's a 1285, it's another 800 Dow points down. 1022 to 1202 would be the target area if today we close decisively at the low, and next week, no matter what bounce we have, we make a lower low. Then I would say we're set for just lower lows and lower highs all the way into, what was the month? I think that would be back into mid-July. That's the way it's looking right now. Wow, I hope I'm wrong. So thank you for calling. I appreciate your call.
Great. Thank you, Basil.
Thank you very much. Okay, folks, I said I'd show you something. I'm going to show you something now. I first have to go here. I have to save it. I have to go to, I'm going to go to close workspace and now stand back. If you're looking at Tiger TV, look at this. Here we go. You remember I'd spoken about for I don't know how long. It's at least 4 years that I've spoken about that at some point the economy will get bad enough that the Fed will be forced to, well, it's actually 10 years that I've been talking about it, but I'm saying on TFNN and making a big deal about it, will be forced to Japanize our bond yields. In other words, get them as close to zero as you can. Now, look at this chart. This is the dollar bull on top, Power Shares dollar bull, breaking out, cup formation, breaks out to a new recovery high. This is the S&P, the SPY, makes that C1, C2 double top, ChapmanWave double top, pulling back. The TLT is, I have 129.08. No. What? You're so way behind? That was like yesterday. Today's high is 129.93. And it's breaking out in lane D in the weekly chart, number one. Look at this. You talk about yields. This is the triple yield chart that I show my subscribers at the end of every week. Friday, on Monday, usually I show the triple yield chart. Look at this. I have to make a big deal of the fact that the yields are only the low of December of 2008, 25.61. Today, we've gone to 25.10. Today, we've taken it out. So when people talk about the bonds being screaming at new all-time highs, remember the lower yields, that's the what I call the Japanization of our bond yields. We're only now getting to that level, yet bonds are way higher than they were in December of 2008. The safety of bonds, isn't that interesting? Here's the 10-year T-note yield at 14.72, 1.47, and here at 6.12 is the 5-year. I'll be back to show you some more amazing charts. When we get back, don't forget, you've got today to register.
You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful ChapmanWave. Well, Basil has just announced a one-day online master trader course where he'll explain his ChapmanWave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman here. I had a question to Jen about crude oil. What do I see for crude oil? Now this is going to be very interesting because did I finish my thoughts from before? Where was I? Let me just go back long-term. Oh, look at this long-term chart. Let me just finish this for a second. You see the dollar, you see this beautiful cup formation, big bowl formation. It says that the dollar is attempting in this price, in this sideways, let me just show you this diagonal move right here. In the diagonal move, it could happen earlier, but by the end of July, there should be a break above 23.52. Right now, the dollar via the UUP is at 22.93. So if it breaks out earlier in this leg to the upside, leg D in the weekly chart, you would have expected that the gold, the GLD, would pull back. But instead, there's a price that says the fear factor is involved. And where would GLD go to? Well, I can see it trying to test the inside track. Remember, I'm going to teach about the inside track, how you can use these tracks to be able to tell where the support is, where you've got a great risk of entering with a low, great reward if you with a low risk or shorting, and that says it could bounce, and it could bounce towards the 162 to 163.5 area. So that's going to be that's if gold becomes the currency of fear. So, okay, we're done with that. Now we're going to go to the crude oil. Crude oil, now, all of these charts you're looking at, this chart that you're looking at here, if you're looking at Tiger TV, has the E-minis. There's a left side, right side price time match. Remember, this is what I'm going to teach you. These are simple techniques. 120 minutes on the 20th of May, it went from 1288, and then I've got a left side price time match that says that by the 1st of June at 4:15 in the afternoon, it should break that low. Well, I'm sorry, it did that this morning. It did that at 10:30. So look how beautiful with the inside wedge, etc. So the same thing applies when you take the crude oil. You had a beautiful left side, right side price time match. Remember, that's what I was talking on Tom's show yesterday. And you went from 113.30 in the July crude oil contract all the way down to, I should have typed that in, the week of the 7th of October, 77.40. It went all the way back, missed by less than 2 points to the exact day and the exact price, going to the left side, right side price time match of the 9th of March at 111.49. Now it says, be careful, because you're coming back sharper. You remember, I was talking about that. Unless there's a bear phase or an extreme upside bull phase, price usually takes the same amount of time to go back up and down. Just you get a couple of U-shaped formation. Look at this. You've come down, and it says that the target, if it cracks 77.40, sounds like far away, right? But if it cracks 77.40 and closes under that, watch out. That's going to be very poor. So right now, crude oil has strong resistance at 88.70. It's at 83.40. So I'm looking at this and I'm saying the monthly chart looks just terrible. And we'll have to see in the next day or two if there can be a real strong bounce. Now, this is the exact moment that you should see some kind of a rally in the market. If the market can get to 179, minus 179, and the dollar falls and the bonds fall, etc., maybe we can save the day. I just do not want to see the Dow close at the lows. I don't want to see minus 235 or worse at 4 o'clock today. Why? Because that makes the Monday opening really hazardous to your health. Now, let's just real quickly ask about the euro, the EUR, USD. Folks, my webinar, a week from today, this webinar, all-day live webinar, think about putting an effort in for very little cost, less than a plumber, less than a painter, so for an entire, what did I say, 3 plus 5, 8 hours of work, it is just going to be stupendous. I love these things, and it's the time it couldn't be more perfect. Go to the front page of TFNN, check it out. It's absolutely imperative. If you're interested in technical analysis, you know how much work I do, and most of it's original work. Go to the front page of TFNN, check it out. You've got today to get the special, really a big bargain. Have a fabulous weekend. I'm out of here. Wait, Nico DeHaan's coming up. And